So this is the biodiversity panel. We're 3 weeks away from the close of COP16 in Cali, Colombia, which concluded in disarray and indecision. Didn't manage to meet the COP15 resolution to raise $200 billion to support biodiversity. I don't know whether we can make it up on this panel, but I do think we have an opportunity here to discuss the extent to which business and finance can make a contribution to biodiversity. So let's see if we can make some progress. And so to do that, I'm really pleased that I have with me today an asset owner, an asset manager, a food company, and a planet advocate. What else do we need? So in order, Sally UREN, who's CEO of Forum for the Future, LEANDROS KALISPERAS, who's CIO at West Yorkshire Pension Fund, Peter BACHMANN, who's Managing Director of Sustainable Infrastructure at Gresham House, and Tim Doubleday, who's CFO of Burger King UK. So welcome and thank you for joining us for this discussion. And Sally, I wonder if I could start with you and ask you being the planet advocate.
I know, I wore green especially.
Good for you. Why is it important to allocate capital to biodiversity?
Thank you for asking. 3 reasons. Nature is an asset on which all business relies. It is secondarily a dwindling asset. And thirdly, it is an asset that is either underpriced or not priced at all. So taking each of those in turn, when we think about nature, we're talking about biodiversity. And I looked at the definition this morning of biodiversity, and it was really underwhelming, the variety of plants and animals. I was expecting something a bit more kind of robust, but biodiversity is the variety of species around us. Biodiversity underpins all of our ecosystems, from our water system to our food system. Businesses are inherently reliant on those ecosystems. If we think about fossil fuels, this is effectively bugs that have died and have entered into the Earth's crust. So fossil fuels are also nature, and critically renewable energy is really reliant on nature. And so the asset that we all need, we can't have healthy businesses without healthy nature. We can't have healthy humans without healthy nature. So that's the first reason. It's an asset we all rely on. It's a dwindling asset, and I had I was going to say fun, but it was very depressing. There's a tsunami of facts that talks about how nature is disappearing. So one of the most depressing, I suppose, is a study that showed between 1973 and 2024, all wildlife species had, in terms of the biodiversity of the species, have reduced by 73%. And this isn't in just parts of the world that are far away. Here in the UK, we are the most biodiversity depleted nation in the world. So we are incredibly nature poor here in the UK. So it's a dwindling asset. And then it's an asset that, as I said, is underpriced or not priced at all. And yet we're so dependent upon it. And so nature is a great example of what we call an externality. And therefore, we need to think about it as such. So something like, I had obviously a bit of a numeric soup this morning. $44 trillion worth of assets have a high dependency or moderate dependency on nature. Something like 6 billion losses a year due to degradation of land. So that's mostly drops in agricultural productivity. And so if nature was a bank, we would have bailed it out a long time ago. That's why we need to invest in nature.
Okay, but nature isn't a bank. And so my question is, how do you invest in a butterfly?
Because we have to put a value on these assets, and that's what we're doing through all sorts of different schemes, from nature-based solutions to landscape restoration. We know that water isn't free, it has a price. We know that energy isn't free, it has a price. We know that food crops aren't free. And so there was a time where the purists were saying, well, we shouldn't put a price on nature because nature is priceless. We don't have time to completely turn capital markets upside down. So we have to make capital markets work for nature and therefore recognize the true value of these assets.
Okay, so I want to come back to that. I want to come back to how you put a price on nature assets and then how you then attract capital. We have to come back to that. But before we do that, so you do a lot of advocacy with companies. how do you influence companies to do the right thing?
Yeah, so Forum for the Future, we're a sustainable development non-profit. We work in partnership with a whole range of organisations. Many of those are in financial services, so include Aviva, for example. We do two things. We use futures tools and techniques, so scenarios, trends, to help organisations understand both value at risk, but also value to gain from biodiversity.
So their own value, their corporate value at risk.
Yeah.
And what the corporate value to gain would be.
And particularly through supply chains. So if you're a food company in particular, your value at risk from climate and biodiversity, so from intensifying climate impacts from nature loss is significant, because without healthy, flourishing nature, it's hard to see how food systems will work. But equally, you could have value to gain in terms of investing in regenerative agricultural practice, investing in soil health. If you're in food, that's probably the most important thing we can do right now. Investing in soil health improves its ability to capture carbon, gives you more nutrient-dense crops, improves farmer livelihood. And so we use futures tools and techniques to understand current value at risk, value to gain, and then the more interesting bit is future. And therefore that informs your strategic planning. That's the first thing we do. The second thing we do is a bit of experimentation. And so we have been, with others, working with a group of cotton farmers in Texas to understand the viability of a payment for ecosystems model. So these are cotton farmers that want to switch from conventional cotton production to regenerative cotton production. There's no capital to allow them to make that investment. So they're basically putting a price of carbon based upon the ecosystem assets that they have and leveraging the voluntary carbon market to be paid to restore their ecosystem.
Okay, now we're getting somewhere. So the voluntary carbon market actually creates the investable mechanism. Yeah. Okay, all right. So since you mentioned food companies, let's ask Jim. So Sally's talked about influencing companies. Let's talk a little bit about Burger King, which is a food company, and a food company that majors in beef. So talk to us about how are you best influenced to think about biodiversity and start to build biodiversity into your business model?
Okay.
Why is that interesting? Is it interesting? Is it convincing? When people like Sally come up and talk to you, is that convincing, and which pieces of it are most convincing as a company?
Yeah, I think I can sort of answer from a Burger King perspective, but also one of my roles, I chair the Sustainability Committee for the Hospitality Sector Council, which is working with government departments of business and trade. So I get more involved, if you like, across the sector as well. So I might sort of try and jump between the two sorts of things. I think, you know, from an overview, if you like, from a hospitality sector kind of perspective, I think what Jim Foley was just saying about, you know, why is an accountant involved in sustainability as well, then those areas around risk, reputation, and so on are really very relevant. And you know, as a hospitality business, we march with our people, but actually we sell food. So everything Sally was just saying about the sustainable food chain, you know, and the value and cost of food is really important. So when we get questions, you know, we are a private equity owned business. Our brand owner is a publicly quoted company.
So you're making the distinction between Burger King UK, which is a privately owned business, and then the brand owner is the global Burger King.
Yeah, so Retail Brands International is the brand owner, quoted in New York, and their business model is to have local private equity backed companies under a master franchise managing the market. So we run 300 restaurants, we have sub-franchisees of another 300 restaurants. So in terms of influence, you know, we have influence coming from RBI as a quoted company, and you know, obviously they're asked questions by their shareholders, and we're also asked questions by our investors and potential future investors, banks and so on. And I would say it's a top three question that we get all the time. You know, what are we doing about sustainability? What are we doing about really carbon, biodiversity, nutrition as the three sort of areas? And therefore, are we a long-term sustainable business that is investable in? And that, I think, is the biggest piece of influence that comes to us in terms of an external force influencing where we go from a policy perspective. There are a number of others. You know, NGOs are over us all the time, particularly around animal welfare. I think when they talk about animal welfare, they forget about carbon and biodiversity. They're very sort of tunnel visioned, and they're all interrelated. Legislation is a big influencer. At the moment, there's 30 pieces of legislation around which will impact on the hospitality sector across the broad environment scope, biodiversity net gain being one that's only recently come into being. But where we don't get any influence at the moment, and I think is very interesting, and I think where we will get influence in the future, is from customers.
Customers.
And at the moment, customers, all the surveys that we do, customers say they care, but they do not vote with their feet or with their pound about where they actually eat. And I think for food companies, there will be a massive transformation once that becomes more apparent.
And employees?
Employees, yes, we get more and more questions from employees, yes. We do. I think employees, particularly the younger generation, we have 6,500 employees, around half of them are under 21. So we get more questions now around what we call BK for Good, which is our overall policy. And I think they are choosing where to work based on the values that you show as a business.
It's interesting, your description of this hierarchy of investors, regulators, employees with consumers at the end, because I think most of us would have said, really, it's the consumer demanding this, but you're saying that that's not the case.
No.
Yeah, you agree with that?
I hear it from a lot of our partners. I mean, some exceptions in some markets, but there's what's called that value action gap. So if you poll people, they say, we really care about this, but it doesn't translate into purchasing behavior at the moment.
Yeah, agreed.
Say do gap, here we go again. Okay. All right, very interesting. And are you doing more plant-based protein?
So at the moment, a third of our menu is plant-based.
A third of it?
Or non-meat based, if you like. We've committed to 50%, but come back to the consumer, less than 10% of our sales are of non-meat.
That's really interesting.
Products. So, and I would say that's getting worse. We did a lot of work a couple of years ago, and we were 10-11%, and it's now diminished over the last couple of years. And I think there's also a trend away from the sort of ultra-processed plant-based product that looks and tastes like a meat-based product, and trying to move that into more a proper plant-based, vegetable-based
It's an interesting
product.
contradiction. It's plant-based, but it's ultra-processed.
Yeah, that's how it tastes like fake meat.
Okay, so, all right, Peter and Leandros, now that Tim has identified you as the major influencer of companies, talk to us a little bit about how that works. Do you do it? How do you do it? Is it effective? And how do you know it's effective? Leandros.
First, I'll pick up one of the challenges that's just been laid out, which is even understanding corporate structures, right? Burger King. We all know Burger King, and we're facing a brand, a parent, as well as a private equity. That complicates the sort of data challenge, which is actually part of actually trying to understand being an asset owner of a 20 billion fund in our case. In listed markets, we seem to have some data that we sort of feel that comes from reasonable common sources, and yet 20% of our fund is in private markets. We need to understand that better.
20% of West Yorkshire pension fund?
Roughly, yeah,
Okay.
roughly,
Right.
yeah. And therefore, how do we understand those companies? At what level of granularity do we need to understand those companies? Do we need to understand the private equity company or the underlying assets? That's pretty complicated. I just say that because there's so much emphasis on investing in private markets, and yet there's so much emphasis on sustainability, and actually those two things are actually quite complicated to bring together. I would certainly support any initiatives that created better data or look to create better data for private markets. In terms of what can an asset owner do, obviously there's the engagement piece within the listed space, but I think asset owners, because they do have a long-term horizon, can be exemplars for things that they'd like to see. So it's reasonably well known and was reasonably well profiled. We've recently made what we think is a fairly pioneering investment in a startup called Rebalance Earth that is specifically focused on water and restoration around that. And I think that sort of was picked up from a profile perspective because it went counter to some people's idea of what pension funds actually do. For me, it's very intuitive that pension funds with the longest term investment horizon should have the highest risk tolerance for investing in things for the future. And yet that appeared counterintuitive and interesting, amongst others, to the media, which I just find interesting in itself. I think in terms of the other part that I think we can influence, or at least act upon, is just our observations on what the market failures are. So pension funds, I think, do need to step in where they see market failures. So in the case of this specific investment we made, I think I observed 3 or 4 market failures, which effectively made me think we need to go in. The first market failure is somewhat of a corporate failure, which is corporates haven't paid for the externalities that they've created. And this was an opportunity to step in and look at an economic...
Do you want to describe Rebalance Earth's business model a little bit?
So Rebalance Earth is a startup. It's a venture capital startup. I only say that because, in a sense, its business model will evolve. And when you're backing up a startup, yes, they may have one idea, but actually you need to allow it to sort of grow into others. But it effectively feels that water is a huge issue for this country, and feels that corporates have not effectively, to use your words, sort of paid a price in some form or another for the way that water systems in the UK operate. And what Rob Gardner, one of the co-founders, said to me up front was, we see lots of off-take agreements and other corporate contracts in many other spaces and other sectors, and yet we don't see that in relation to paying for nature as a service. So that's an interesting strapline. I'm not going to put my money just into that. It sounds neat. But then when you go further, you learn other things as you go along. So you also learn that, we've talked a lot about TCFD today, but there's TNFD as well. We learn that it makes a difference if something is mandatory or voluntary, and in this space things haven't become mandatory. So there's a sort of government regulatory failure that I'm then seeing. And then the last bit is actually an asset management failure. This particular startup would have spoken to a number of potential asset management partners to actually invest in that business, to take on that business, and yet none wanted to. So when I saw that was quite a big moment, because there are a lot of commercial asset managers out there, and yet commercial asset managers are themselves retrenching somewhat for various different reasons, the pressure of passive, what's going on in the US and so on. You add all those 3-4 things together, you think this is an idea, and then we have the money. It's a small amount of a 20 billion fund, and we stepped in.
So Peter, we're nibbling at the edges of how do we go from what Sally was saying, is you use this asset, but how do you get a price put on it so capital can come in? How do you do it at Gresham House?
Yeah, so look, I think food is an interesting thematic, because I think a GP or an asset manager's role is to actually try to create the solutions for some of these bigger problems. Like if I think about some of the biggest problems that we face, it is in how we produce food and nature more generally. And to give you some examples, we think, for example, in the way that we produce a lot of our food is just uses too much land, water, chemicals, and pesticides. So what we've done is we've built a business called Fisher Farms that does vertical farming, and that drastically improves all of those. It's 1,900 times better from a carbon perspective when you compare it to long-haul imported field-grown crops. So we think about how do you create solutions to these big problems, but ultimately you have to do it in a way that can make money today, because I think, as both of you have said, no one's really prepared to pay for sustainability at a premium. So you've got to find solutions that can actually make money today, solving some of these problems. We talked about used cooking oil before. That's another thing that you can turn that into biofuels. But coming back to biodiversity, what we found worked is there's a thing in the UK called the Environment Act. To me, that is the single most powerful piece of legislation globally today that's put a price on nature. And that has ultimately then created a solution or an opportunity set where we've said, actually, if we can create that solution for someone that needs to pay that price in a way that actually saves them a lot of money, that's an investable product. So we created a business there called the Environment Bank. We built it from scratch, and we started to build habitat banks where we created a biodiversity net gain unit that's in accordance with the government metric.
Hang on. A biodiversity net gain unit.
Yeah.
Okay.
So
Could we just back up and footnote that? BNG. What's BNG?
BNG. So biodiversity net gain is a concept that we need to go and tackle biodiversity, or nature more generally. Biodiversity is a good, I guess, catch-all for ecosystem value, ecosystem services, effectively everything that we need to sustain life. And the more biodiversity that we have, the more life that we've got. And in the UK, we've lost 73 million birds over the last 20, 30 years. So it's about creating new nature to help that. The Environment Act effectively says every new planning permission that we have in the UK, you need to improve the biodiversity post-development by at least 10%. That's pretty meaningful. Like if you're building an Amazon warehouse on a greenfield site, that's a lot of concrete you need to give up of Amazon warehouse to go and do biodiversity on site. So what we're doing is we're building habitat banks adjacent to where these developments are at a really big landscape scale, so 50, 100 hectares plus. And then we create a unit in accordance with the government metric, which makes it really simple. So a lot of the people talking about nature being hard, it's what are you measuring? The government did a great thing by actually just producing this DEFRA metric, and it just simplifies it. You have a unit you can then sell to a developer, and that saves them that effectively the opportunity cost of doing it on site. So we've created a product around that, and we think that's a pretty neat investable product, specifically around investing into nature.
So because the developers are paying for this habitat, you can attract capital into building the habitat.
Yeah, so the developer, like if you looked at a 100-acre development for homes, for example, we think that if you try to do all the BNG, biodiversity net gain, heavy lifting on site, it's probably going to cost them about 50 million quid in terms of lost developable profit. And they could go and do that by buying biodiversity net gain off-site, but within the local planning area for a fraction of that, 2-3 million quid, for example. And the benefit of that is that actually they save that 50 million quid, but ultimately the nature that we're creating in these landscape scale habitat banks is much better for nature as well. So there's a thing called the Lawton principles, really the bigger the better in terms of nature impact. So you're doing something that has more nature impact, it creates an investable product, we think that's quite unique, but ultimately it helps solve the developer's problems, which is how do you go and deal with and provide biodiversity net gain at scale. And we think that this is quite a neat way to unlock Labour's big house building plans and development plans to be able to do it in a really economic way. Because that was a big, I guess, pushback when people talked about BNG in the first place, which was how are you going to do this affordably? And I think this is quite a neat way to do this at scale.
It's sort of thing we do as a business. If we're building a new drive-through, we have exactly that challenge. The start point is you are meant to improve the site that you've got. Now you may not have the physical space to do that, but you try and do it on site first, and then in the local area. But from a company's perspective, you've got a 30-year commitment to look after that biodiversity, which actually from a company's perspective is very difficult to do and to commit to. So working with an environment bank helps you in that long-term.
Oh, I see. So you're saying if you're a hamburger store and you need to create a nature offset for what you've covered up with asphalt.
Yeah.
You're saying, and the legal requirement is for a 30-year covenant.
Yeah.
You're
So
saying,
for example, we would.
in the business you're in, you can't really do that easily, so you want to hand it over to somebody who's in that business.
Yeah, but also, if you've got a fairly small site that you've developed, you might not have a lot of green space. You can't plant loads of trees. What are you actually going to do? So you're quite limited in what you can do, and then also have that commitment. And actually, I totally agree. One of the things that we're talking about from a hospitality sector perspective is, could actually all the big companies work together and actually do something at scale, which would be much more meaningful than people planting the odd tree around something and hoping that.
Okay.
That
Great. Now we're getting somewhere, because now I'm saying, why are the capitals coming in? Who would give the money up? So, Leandros, what else is there? What else can you see? In what other ways can you invest in nature? Kind of fiduciary investor, so somebody needs a market return, invest in nature. What are the other options out there? Well, Sally, what are you seeing?
Well, going back to, say, payment for ecosystem service business model. So you can invest directly in smallholders to enable them to convert to more sustainable food production, for example. I mean, all of this ultimately is investable. I think it's a question of timescale for returns. So I think that's the sort of tension.
And that's what that is where I was going to focus. We have a paper that should be coming out next week. We actually commissioned a consultant, which we rarely do because we're an in-house asset owner, asset manager. But we did commission a piece. It was actually to do with fossil fuels to begin with, but we asked for an expansion of the work. And one of the things I was focused on was actually how you set your strategic asset allocation, because without getting that right, you don't actually create the headspace and capacity to actually invest in this at enough size. So that's where asset owners can directly play their part in actually the asset allocation process. I'm a traditional CIO, you know, schooled by, in my view, the best in the business at USS, Roger Gray, you know, many years ago. And so for me, you know, the top-down approach, mean variance optimization, you know, fit easily in the way that I learnt my business. It's clear over the last few years that it's not enough. So there is obviously work that's been done. Things like moving beyond modern portfolio theory, you know, is a work that's come out. And you know, I think there's a.
When you say moving beyond modern portfolio theory, you mean moving to a risk-return impact?
I mean, effectively.
Three-dimensional.
Yeah, I mean, effectively, it is doing that because it's effectively saying that, you know, without getting too in the weeds of it, it's sort of saying mean variance optimization works if you believe that systemic risk is something that you can't control for.
Okay.
The reason I mention this particular work, it was co-authored by someone who used to work in the US pension plan system, is that it actually feels quite heterodox. And, you know, the world doesn't particularly like heterodox. And so it's incumbent upon people like me who are not heterodox in their day-to-day work to sort of say, well, look, actually, I get it, okay? I get it. That we still, you know, we're a 20 billion fund. We have to adopt an asset allocation that is predominantly based on principles that have existed for 60 years, but we actually may be able to do something about systemic risk, and we have to bring that into the asset allocation process, which effectively is a bottom-up process, which doesn't work on the same principles as others.
So Peter, what else? So I'm trying to give these asset owners in the audience ideas about what it is you can actually invest in. So we've talked about natural capital management. We've talked about biodiversity net gain. What else is there?
Well, I think you need to think about biodiversity and sort of the natural capital stock as how do you do things that have an impact on the level of water that we use, the amount of land that we use, the number of chemicals and pesticides that we use, and try to work backwards from that. You know, I talked a little bit about vertical farming. You know, we're 250 times more land efficient. We use 1,900 times less carbon for production of food, 95% less water. You know, that's pretty impactful to me. And you can produce at or below the price of field-grown crops. And the reason that vertical farming is working is that if you looked at it a few years ago, LED prices were way more expensive. They used a lot more power. You know, if you looked in the last 3 or 4 years, LEDs have effectively got 15 times cheaper. So what was not economic a few years ago, we can now produce leafy greens and various other things probably below the price today. And I think long term, we can get it to way below that price. So that's a pretty powerful driver, that you can create the sustainability benefits, but you can produce it at a price that's way more economic. And you're benefiting effectively from a cost base that's coming down because LEDs are getting cheaper, renewables are getting cheaper. They're your main source of power when you produce them on site. So that's a really good thing. Whereas field grown, everything is going up. Fertilizer, land, water use is going up. So, you know, we like to think about how you can try to tackle those things. I talked about used cooking oil as well. There's a huge amount in the alternative protein space as well. I think that alternative protein 1.0 got the flavor through by sugar and fat, and that's why they just didn't work. They weren't nutritious. But I think we're seeing some quite interesting evolutions of that where you'll get the taste, but you'll get actually a nutritious product as well, which is really quite interesting. So there's a lot of things coming down the pipe, I'm really genuinely excited about what is possible there, and that is actually really quite investable as well, and you can generate some very attractive returns.
Sally, did you want to have a comment?
We haven't talked specifically about nature-based solutions, I realise, and so this is a really interesting area. So you can invest, for example, in the restoration of a mangrove. That then improves the ability of the mangrove to sequester carbon.
How? Who's going to pay you to invest to
Well,
improve mangrove?
so we go back to the voluntary carbon market.
Voluntary
So
carbon.
if you've got a net zero strategy, you can do a lot to decarbonise through your own operations, through working with suppliers on Scope 3 carbon emissions. Often there's a residual piece of carbon that you can't do anything about, so you need to go to the offset market.
Okay.
And so the offset market is less like the Wild West. It's a little bit like the Wild West, but there are good offsets and bad offsets. So bad offsets are just perpetuating schemes that don't really have a long-term potential to decarbonise. Good offsets are nature-based solutions where you're investing to restore an ecosystem which not only then can sequester carbon, but can then redeliver livelihoods back to farmers. And I think that's a really smart way to accelerate decarbonisation as well as build climate adaptation.
I have another question, but I wanted to find out if any of you have a question. Yes.
I have a question a bit more on
Can you wait for the mic?
Thank you, Adrian. Hi, I've got a question on the pricing aspect that we started with, which is how do we price the priceless? Like if you take, we're talking about nature and trees, but what about, and we spoke about this earlier, what about bees? Because if bees go extinct, we all die. You don't even get to do fiduciary duty, like it's gone. How do you price the priceless? Do we need a voluntary biodiversity market where you start putting money into keeping the bees alive?
I've got there is a study that actually put a price on the
Yes, I was
pollination
gonna say.
value, and it was about $500 billion in terms of annual value globally. So someone has quantified it. And I think you are now starting to get to a place where nature is starting to be valued. So World Wildlife Fund says nature is worth $125 trillion. So, somewhere between that at bees and the whole nature ecosystem, there is value. I guess it's just trying to find ways to get people to pay for it. I think that polluter pay process is going to be the ultimate arbiter. Like I saw something in Denmark, they've announced that they're going to charge for cows flatulence. 43 euros a ton of CO2 is from cows, which is, that's crazy. Yeah, that's just come out.
Well, Tim, are you doing that?
No.
I meant were your cows doing that?
But the interesting point is that you then get into the regenerative agriculture
Completely.
point. And we're doing quite a lot of work with Bord Beer in Ireland, Origin Green, the sort of Irish projects there. And we can see a route to take about 70% of the carbon out of beef through regenerative agricultural practices. The challenge is, how do you get there with scale? So we've got the data that shows that that's achievable, but where you then get to is there sort of a massive hump of cost that you need to get over, and can be out to the other side of that you've got sustainable production, with the right kind of carbon, biodiversity, etc. And actually, when you have that, is it going to create the same number of kilos of beef off the same land in the future, or is it going to be less? Because then you start to get a whole dynamic model of how does that money get repaid?
But
in all of that.
the Danish policymakers went down this path because actually there's some really, you can add red asparaginopsis, basically red seaweed, into cow feed, and that can reduce methane by like 80 to 90%.
Yeah.
So, the policymakers are thinking about there are technological nature solutions to help that problem.
So we have
we did a farm visit in Scotland that they're doing exactly that. And actually you then get down to things like feed. Forestry risk commodities, all that legislation that's coming in, soy, most of our production, well, all our production is English and Irish grass-fed beef. There's a tiny bit of soy goes into Ireland, nothing goes into UK. So those sorts of things, also sort of contribute to, the overall, if you like, value, if you like, of that product.
We have a suggestion on Slido, and I want to get your reaction to that. So what can we achieve better biodiversity impact simply by reducing current large-scale investments that destroy nature?
I mean, that would be helpful, wouldn't it?
Okay. Any other comments on that?
Well, I think there are checks and balances that mean this impact that's pointed out there, it's far less than it used to be. I mean, biodiversity net gain is just an example of that. So 30 years ago, well, before 40 years ago, there was nothing called environmental impact assessments. Now they came in about 30 years ago. Ultimately, the point about that question is your regulatory environment. So in Europe, even in the US, in the UK, it's quite hard to entertain developments that do destroy nature, but in some parts of the world, actually the regulatory backdrop isn't there, which is why sort of the international scene is so important and why political context is everything. So in Brazil, the deterioration of the Amazon has slowed down since the government changed hands. So it's partly an investment piece, but it's also partly the political contect.
Yeah, which reminds me the government's going to change in North America as well, but
Is it?
we don't
Missed
have
that
time
one.
for that. How are we doing on time?
Yeah, we're fine. You're just starting to wrap up now.
Okay. Well,
Jamie, could I add one?
yeah.
On the destruction, like if you look at the biggest destroyer of habitat at the moment is soy production. And we think vertical farming is probably a few years away from actually doing that economically. And actually, if you start to tax certain elements of food production, it could probably become economic today. And then if you look at vertical farming into places like Canada, for example, they've got really low-cost green power, it might be economic today already. So, there are technological solutions to try to tackle some of these big crop destroyers and planet destroyers out there now, which I think is really impactful.
Any other questions? Yes?
Hello. Oh, hi. I'm Merla. I work for Red Wheel, and I focus specifically on biodiversity and human rights. And I was wondering what your opinions are on making the human rights case for biodiversity protection and conservation, seeing as it's a business's responsibility to respect human rights according to the UN Guiding Principles. And in 2022. It was recognized as a human right that we have the right to a clean, healthy, and sustainable environment. And obviously there's indirect impacts on right to food, right to health, right to water, etc. And I was just wondering whether you think that type of a perspective could advance progress on biodiversity?
Views?
I mean, I'll just give a view as an asset owner. We did a piece of work with Pensions for Purpose last year, which reset our investment beliefs using UN Sustainable Development Goals. We focused on 5, which then became 3 themes. That wasn't specifically what you covered. But I think from an asset owner perspective, having 2 or 3 key themes that actually form part of your investment belief statement is important. You obviously can't have too many, otherwise it does actually dilute, the focus. And actually it is focus that is in danger of getting lost, from an asset owner perspective, because we can care about everything, but then not focus on enough. And in that sense, some of the debate earlier, which I know focused on, how much do you do locally and how much do you do, in big scale, I think, is actually quite important. So I know that there's a lot of things that need to be done at scale, to actually, there's a lot of money to be put to work. But I sometimes wonder and worry whether actually then all of the good local initiatives and other things that have to be done at source actually get lost. So not a direct answer to your question, but a wider sort of set thought on beliefs.
Okay, we are gonna have to wrap up, but I wanted to see if we could close with a crystallized piece of wisdom that you might offer this audience in closing. Tim?
Talking about a piece of wisdom. I
A
think
closing thought, just something
Yeah,
that
closing
they should take away with.
I think two things. One, as a sector, hospitality is very heavily invested in zero carbon, biodiversity, nutrition, and by example, we've launched a sort of toolkit around biodiversity, unapologetically following the carbon sort of rules on a tier 1, 2, 3 basis rather than scope 1, 2, 3 biodiversity net gain, kind of at the sort of scope tier 1 level menu and supply chain. So we're trying to break it all down and actually look at how, as a sector, we can invest and work, you know, with communities in each of those sorts of areas. So I think, you know, what I would say as a sector, and, you know, also Burger King as a business, is that we're 100% invested in wanting to get on that journey. There are some significant barriers to that journey, and it often comes around investment, and actually having investors in your companies who are willing to take a longer term view, rather than a short term profitability view, to help you get through that stage.
Thank you, Tim. Peter?
I'd say nature needs us. You know, we've genuinely got to go and think about it. And actually, if you harness nature properly, like some great research, we do nature-based solutions globally. It's worth 10 to 20 gigatons of CO2 savings a year. 10 to 20 gigatons. Like 10 gigatons is 44,000 gigawatts of renewables. Like, who's out there doing that? So nature is a really big part to play. And I feel like nature is almost like when I was in infrastructure 25 years ago and renewables 20 to 15 years ago. It just feels like people are starting to realize it's really a powerful source of good, and you can ultimately make good asset returns out of it. So I think that's the takeaway. Let's just keep pushing and helping nature.
I guess mine is just pension funds are in the best place to invest, given they should have the highest risk tolerance. And I sometimes look at my peers in a very broad sense and just wonder whether they feel that too. So that would be my takeaway.
That's quite a closing thought. I like that one. Sally?
I have two. I think legislation and governance will catch up with the imperative to take nature seriously. TNFD will become mandatory quite soon. Actually, within the requirements of CRSD, it is mandatory. It's got in there through the CRSD route. And there are increasing numbers of organisations that are putting nature on the board, giving a seat for nature. And then the second thing I would say is actually connections really do matter. Just at COP29 in the last few days, recognition that actually humans' mental health and physical health is linked to nature. And so the more we can make these connections, the stronger we can make the case to invest in nature.
That's great. Well, thank you very much. Please thank my brilliant panelists for that.